Hey guys, what's up and welcome to a new Tesla update video. Apologies for last week. I had a lot of stuff come up essentially that always happen pretty much around market close where I would normally record. I couldn't record. It's because of that. So honestly, I wasn't paying attention to the market that much last week anyways because I was waiting for, the market to finally decide something. So yeah, either way, let's just get into it. If you enjoyed, don't forget to hit that like button. Let's just get started. So Tesla ending the day up 0.76%, which ends us at $871.10. Now, obviously, it's a green day, which is great. However, if you actually look at the candle, it's not so great, right? Not only did we end technically red, well, not red, but like red relative to open, because we did end lower than we opened. But we have essentially two fairly bearish candles in a row, right? This one just showing pure selling pressure. This one pretty much showing pure selling pressure as well, just in a slightly different way where, where it opened, it came up pretty high, got rejected at the 200 moving average. You can see this white line right here, right? Around 910, 911-ish. Got slapped down again twice in a row, which in my opinion is actually quite bearish. And on top of that, it's almost like a reverse hammer candle, right? A bearish hammer candle, similar to this one. Clearly, this one didn't play out though. Same candle as this over here, but clearly this did not play out as, potentially, we might have thought it would at least. So, that is something to consider, right? It's not a, be all end all kind of thing, but it is definitely something to consider. The fact that we are getting consistently rejected at the 200 moving average and two fairly bearish candles in a row. Last week, by the way, we had a pretty bearish candle here. This one being right here, right? Of course, also kind of, showing a disgusting amount of selling pressure, ending substantially lower than the open on the week. A lot of, very long wick. It's also considered, it's also called a shooting star candle, where you get this kind of, essentially a reverse hammer candle or a bearish hammer candle on an uptrend, which in this case we were in an uptrend. And you get something like this where it just has a long wick at the top, ending lower than it opened on that week in this case, and pretty close to the bottom, right? So just something to consider, guys. I am overall, again, I will admit, I am net bearish. That doesn't mean that short term, maybe we can't still find some movements, but we'll go over that. I'll go over the SPY and the VIX as well, because that of course influences Tesla. But nonetheless, Tesla on the daily, in all honesty, not looking atrocious. It's not looking that bad. I wouldn't say it's looking like ultra bearish or anything just yet. The daily on the RSI at least, right? It's looking, I wouldn't say it's looking bullish, but I wouldn't say it's looking straight up bearish either, right? If this right here, this low right here came down lower than this area right here being 57, so pretty much this right here, right? If I expand this, you guys can get a better idea. If the recent low that we had, I guess today and Friday, if this right here went below this level here, right, again around that 57, then I would have been pretty bearish. It didn't. Excuse me, it didn't, which is good. That doesn't mean that it's too bad just yet. But again, I am still ultimately bearish, mainly because we are just getting rejected at the 200 moving average. I am still net bearish on the markets in general, especially with September coming up, not too far away. And I personally believe September, October, November, I think those 3 months, the majority of it is going to be quite bearish and quite bad. So that's something to consider as well. But moving into the 1 hour, let's actually, before we do that, let's take a look at the major moving averages that we want to take a look at. Of course, the 21 EMA is still well above that, which is great, which is why Tesla's not looking, ultra bearish or anything just yet, though I am starting to feel a little bit more bearish ultimately regardless. Finally got rejected from that, green part of the line of the Bollinger Band, though again, like I said, usually when you get rejected, you want to come down to around the white line of the Bollinger Band. I don't think we're going to slap down too hard potentially, but Wednesday we have CPI data, which could be a pretty big factor as to a reason to sell off potentially. We'll see how that goes. Of course, I'm not making any major trades up until that. I did make a 20% SPY put trade this morning to afternoon, and I locked it in. Not a lot of money. I'm playing with what I personally consider I guess pocket money, side money, if you will, because I'm just kind of, I'm being very patient. I'm not making a lot, but I'm definitely not losing any money at all. Which is, in my opinion, a plus, right? Especially when we're trading all the way up here. Now, again, I want to see a push down somewhere to around the Bollinger Band. Again, the main reason I don't think it'll happen that fast, maybe, end of this week, potentially, if anything, is because I think the Bollinger Band will catch up to somewhere around this blue line, which will put us somewhere around this 830 to 840 level, where I think we might see a little bit of a relief bounce potentially on Tesla, just for maybe a couple of days or maybe a week or something like that, and then from there I think is going to be where the fall really will start happening. So that's kind of what I'm currently expecting. So we'll see how that goes, of course, as time goes on. Moving along to the 50-day moving average, substantially above that. The 200, of course, getting rejected, which is a pretty big thing. This is something a lot of people look at. Even if you're someone that doesn't believe in moving averages that much and whatnot, like the 50, the 200, and the 100 are still something that you would probably want to look at regardless. And in this case, I'm one of those people. I'm not a huge fan of the moving averages that much. I'd have to have several indicators showing me showing me the same thing a moving average would to really trust it. But the 200 is something I personally also look at, mainly because it is a pretty major one, right? This is something that pretty much everyone, I think, will is supposed to look at. And then, of course, we have the 5 and 10-day moving average, well below the 5, but just barely above the 10, so kind of in that middle of that little sandwich there. So ultimately, guys, Tesla, I think, will be kind of, potentially trading in this range, maybe slightly more lower to maybe like 840, but I think ultimately around is kind of, between 900 to 840, I think is kind of the range where we are most likely going to be trading in for maybe the rest of August or the majority of August. If there's something that indicates a potential move higher, then I'll let you guys know. But for now, I'm not really bearish, but I'm not necessarily like full bullish either. I'm just kind of neutral, right? It's in a spot where it's kind of in like this kind of limbo mode, in my opinion, where I'm not really looking to trade it too much right now. I'm being very patient and I'm waiting for like a real move to finally set up and show itself. On the 1 hour, you can see it is showing some bearish divergences, right? The RSI is making lower lows while the R stock is still substantially higher than what it was back here. So a little bit of a bearish divergence happening on the 1 hour. 15-minute is also a decent one to look at, though 15-minute is just kind of following the stock ultimately, though it's still setting up some, potential bearish divergences over here as well with how low the RSI fell when the stock didn't fall that much lower compared to situations over here. So not too crazy on the RSI for the 15-minute, which again further indicates that I think ultimately Tesla, even though it will go up and down naturally, I think the range is pretty set in stone, again being that kind of 900-ish to maybe like 840. That range, I think we're just going to zigzag through it for now while we wait for the SPY and the VIX to play out. So this is why I want to bring this up, right? This is pretty important. Again, the SPY can influence Tesla to a certain degree, and personally I believe the SPY, right, it seems like it is trading within this channel at the very moment, right? So ultimately what you want to be looking at is this channel, not financial advice. Make your own decisions, do your own research, blah blah blah. But pretty much as long as the SPY is within this channel, I'm not bearish, right? If the SPY ever breaks this channel, and essentially just make it simple, if the SPY ever falls below 410, let's just say, if the SPY ever collapses under $410, that in my opinion is where you can start potentially looking bearish. If you want to be extra safe, what you can do is if it does come down to around 410 and then bounces up, so essentially breaks out of this channel to, let's say, 410, I'll just draw it roughly. So let's say we break out this channel as an example tomorrow, just as for the sake of having an example, to 410. Let's say we bounce off 410 and then we come up here and then we get rejected around this area. This is, in my opinion, a safer area to start entering puts. Again, not financial advice, make your own decisions to make them move to the downside. That's something to consider as well. You can also make the play around here, but this is slightly more risky because this could also be a false breakout. This can usually be more secure in my opinion. But obviously play it how you will and how you want to. It's your decision and it's your money, right? So this is essentially what I'm looking at right now. I want to see the SPY to really turn bearish, on the market, on SPY, on Tesla, to fall below this, because this to me would be a trend break. Following that, of course, we also have the VIX. Taking a look at the VIX on, let's say, the daily chart. As you can see, we're still kind of respecting this general uptrend that we are in, though it is, of course, showing some overall general weakness. Twice it fell below it, but twice it kind of got sucked back up, and it kind of maintained roughly this level that we are still within. So pretty much what you'd want to see is the VIX, for the bears at least, not fall too far below this, and especially close consecutively below it, right? And the reason that I'm not really feeling bullish, I'm not fully bearish yet, is because the VIX is looking weak, but it's also at a point where I wouldn't be surprised if it does get a potential decent bounce, probably in relation to CPI coming out on Wednesday, which would coincide with the bounce timing decently well. So I'm not, that's why I'm just kind of waiting for that. Again, I want Tesla to fall so I can sell put premium, but again, the put premium is not worth that much when the VIX is all the way down at like 21, so it's not very worthwhile. It's not very lucrative in my opinion. So again, in my opinion, the market is just pretty much in this kind of limbo mode, just waiting for like a real move to be set in stone. And up until that, something like that happens, if it means that I have to have a very slow August, then so be it. I'd rather do that than potentially make a trade for the sake of making a trade, potentially get bagged, and then I'm sitting here holding shares at a higher price, when I personally think once we do fall, which I do believe we will fall from this and make a fairly decent move to the downside as a market in general, I personally believe that that's going to be quite a big one as well. So I wouldn't want to be back holding anything. Again, not financial advice, just my opinion. And this, of course, also applies to Tesla. I know people are going to be freaking out, going like, but the stock split's coming up and it's bullish and this and that and that and this. I mean, if that's the case and that's what you think, by all means, make your trades. You know, enjoy the run. If you think it's going to run up to like $2,000 or something like that by this month, I know some people probably think that. It's your choice. It's your money. Do what you will with it. I personally don't think that'll happen. I personally think the market is looking overall ultimately more bearish than bullish. Until something proves me wrong, I will stay according to that. And yeah, so that's what I'm thinking. That's what I personally think is going to happen. So let me know what you think down below, ladies and gentlemen. But that's it for this video. We're back in action, by the way, for videos. I shouldn't be missing too many more videos in general. So yeah, that's it. Thanks for watching, and I'll see you guys tomorrow. Peace.